Hey everybody, welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, we have the CPI numbers. They just hit. We're going to get into that in just 1 minute. But also just keep in mind, yesterday was a day where the financials flushed on the back of comments from a lot of the financial bank CEOs and CFOs about negatives on loans, meaning people are not paying, delinquency rates are rising. All of these factors causing big sell-offs there, and these are just more breadcrumbs that tell us the economy is slowing tremendously. We'll look at a couple of those charts in just a second, but let's go to the CPI data and what the markets are doing going into the open. So first and foremost, we can see here that this was yesterday after hours. This is 4 in the morning when the SPY begins trading. It was down a little bit. It floated up. The CPI numbers came out. We saw a flush, and now the markets are grinding back up. Why did we see the initial flush? And also, why are the markets bouncing right back up towards the flat line to start the day? Well, CPI came in line. So month over month, 0.2%. I went over these numbers with you guys over the last couple days of what was expected. So again, month over month in line. CPI year over year, 2.5%. That was at expectations as well. So the two headline numbers right here, exactly in line for, again, of estimates. Now, the only kind of small issue here was with core CPI month over month. It came in slightly higher than expected, 0.3% versus 0.2% expected, and then core CPI year over year in line as well. So there was one little minor caveat with the core CPI month over month, and I think that's what kind of got the algos to sell the market initially. I also think the markets were secretly hoping inflation would come in lower than expected across the board because they want that 50 basis point cut next week at the Fed meeting, right? So ultimately when they came essentially in line or maybe in line with a fractional little uptick, that's where the markets again sold off. But I think that the markets again said, listen, jobs, yes, they're declining pretty rapidly, but the market, again, is a justifying machine, justifying the numbers here and justifying the economy and saying, okay, we're okay here, and we're rallying back up. So we're now in a situation where CPI is out. We'll get jobless claims tomorrow on Thursday, but again, jobless claims not hugely negative or positive for the markets, and it kicks the can into next week when the Fed unveils their first rate cut in this cycle. All right, and again, that's Wednesday at 2 p.m. Eastern time. I will be live right here, probably with Dr. B, maybe a few of the other traders. We'll be analyzing, we'll be trading, we'll be doing it all right here at VerifiedInvesting.com. All right, so let's get into a couple other things. What is moving this morning? So we have a market that is inching up. In fact, we're actually at the highs of the morning session here as I refresh the chart. But let's talk about the financials here. JP Morgan Chase yesterday collapsing as much as 7% intraday before recovering and only ending down 5%. Now, you can see right here what we were looking at. So you had a beautiful trend line here to right here and right here. So we knew that the chart, I mean, this chart was at all-time highs. It was due for some sort of correction. But the kicker was this, is JP Morgan's chief CEO, he came out and he talked about the negatives for the economy, how the economy was slowing. He even brought up the potential for stagflation. Now, what is stagflation? Stagflation is where the economy slows, but inflation actually upticks a little bit. Now, the reason why that's the worst, this is, by the way, the word stagflation is like, that's the worst word in economics for an economy. And the reason why is usually when you have a slowdown in an economy, you get deflation, right? Where inflation comes down because people have less money to spend. So as people are losing jobs, at least prices come down a little bit or stabilize. What happens with stagflation is that even though people are losing jobs and have less money, inflation still goes up, which is the worst because now people can't even afford to buy those types of things that they were buying before because prices continue to go up even though people are losing jobs. So watch that. I've talked about it before, but that's what Jamie Dimon talked about. Now, he also talked about the financials for the bank here. We saw Goldman Sachs 2 days ago talk about their trading profits are going to be a lot lighter, which, by the way, is a little weird to me because we've had more volatility for traders like myself. This is the type of market that you want. You want volatility, but Goldman Sachs said lower trading profits. These guys' net interest margin is going to go down because interest rates are coming down, so their earnings are going to be hit, and that really kind of shook the bank stock right here, dumping out here. Now, another company that got crushed yesterday, and this one was even worse than JP Morgan by a mile, was Ally Financial. Now, this one said many of the same things. The CFO came out and said many of the same things that Jamie Dimon said. And what Ally Financial CFO said is people aren't paying their loans, they're struggling, delinquency rates are rising for the bank specifically. So again, this isn't like, oh, generally delinquency rate. This is like the CFO saying, guys, I'm looking at our book here and people are struggling. The consumer is not paying their loans and delinquency rates are spiking. So again, that stock yesterday down, I think it was down about 17%. Pre-market, it's basically around the flat line. But my point of bringing this up to you is that these are more breadcrumbs, right? So the narrative in the mainstream media is like, oh, soft landing, no landing, we'll be fine. They always say that until it's too late, right? Just like everything else. And so what we have to do as traders and investors to be ahead of the curve, to not be the bag holders, we have to be looking at the breadcrumbs and making sure that we're looking and seeing what's going to happen, or at least what's highly probable. And that's honestly where the charts come in. I mean, you look at the JP Morgan chart going into the last week or two, it was trading at all-time highs, ridiculous valuation, as if nothing could go wrong, and then obviously that's when something goes wrong. Okay, a couple other stocks in motion today. GameStop. GameStop, guys, reported earnings yesterday after the bell. And I'll tell you guys, with GameStop, it is down on the day, about 10% or so, trading at $21. The company missing by a mile in terms of revenue declining. And also they announced $20 million more in a share sale or in a stock sale. And this is the only thing, my only issue with the meme stock craze is it's great, but the company GameStop, to me, just keeps using it to raise capital, and then I'm not seeing changes at the company. So if I'm someone, and I don't own any GameStop or anything like that, but if I'm someone who does own it, I'd be like, all right, guys, you raised capital over, on the daily chart back a ways when it was having that last pop earlier this year. Well, where's the changes? Like, what are you doing with all that money to morph the company into something that is in a new age, right? And maybe they are doing it, maybe we just don't know about it. But here's another huge capital raise that's going to dilute shareholders even more. And the question is, okay, well, what the heck are you going to do with that money? Is it just going to go into the pockets of the elites there that at GameStop? I don't know. But I do think that investors, if I was an investor, I would be demanding answers from the company with these continual capital raises. All right. So just keep that in mind, folks. Again, just trying to speak the truth to you guys and get you guys on point. Now, First Solar and solar stocks are running higher today. Nice moves here on the back of this. I haven't had a lot of time to look into it, but we are seeing, again, look at First Solar trading up nicely this morning, about a $10 move or about 5 to 6%. I'll tell you, there was a stock yesterday that I had isolated down, and I was saying to myself, guys, this is the next swing trade for my members. This is something I'm going to buy myself. It was Solar Edge. Solar Edge, 30% short interest. And if we look at this daily chart, look at this. Look at this chart. I mean, just absolute annihilation. And I finally put in a little bottoming signal yesterday, but look at this chart. It used to be a $350 stock. Yesterday's close, $17.85. And I was saying to myself, man, this is looking better and better, high short interest. Look at the last daily chart. Look at what this has done, right? So you have all this downside from basically $30 2 to 3 weeks ago, straight down to touching a low of 17 yesterday before that bounce. But this is what attracted me to it. This signal right there, a little bottoming tail forming, which tells you buyers were coming in. I think we know why buyers were probably coming in there yesterday. But again, if that news hadn't hit, this was going to be my swing trade alert for the members today in smart money stocks and ETFs. That's the nature of it. Sometimes you miss them, but the idea is that the analysis proved correct here and that this was a great opportunity. The only difference is it's now trading up sizably pre-market. I think it's up at around, it's at least up $1 this morning. Yeah, it's up $1.40, so it's trading at $19.15. So yeah, I mean, that's just the breaks of it, but I did want to pass that along to you guys as we continue to kind of monitor the markets here on names like Solar Edge and the rest of the group. All right, I continue to be a fan of the China markets, even though they're in the toilet right now, in all fairness. We can quickly go over the Hang Seng stock market chart here, as I do want to kind of keep an eye on this. I do think that what we're seeing is a warming of China relations. So let's flip over to the Hang Seng, the Hong Kong market here. You can see you had a wedge pattern breakout. We're now retracing to the scene of the crime. Just a little bit more downside potential right there, and I think you get a move here. And again, we saw that Alibaba's now out of the crosshairs of the government. The government there is starting to make innuendos of, hey, let's get foreign investors back in here. And I think what's going on here, just to speak frankly with you, is that China's realizing they kind of screwed up, right? They kind of chased away a lot of foreign money by cracking down so harshly over the last couple years. And now look at the economy. Their economy is mired in a recession that's been a long-lasting recession. So I think they're trying to lure things back. Generally, even though the chart is beaten down like crazy and it's scary, this is oftentimes places where you might want to invest. And here's that bigger picture of that wedge pattern. You can see you are making, here it is right here. So you have this down-sloping line, up-sloping right here, and then again, that's your level there. And what's interesting here is if we zoom out on the chart, you can see that we're way, way lower here, way, way lower on the bigger time frames, going back to 2018, 2019 of where this market was trading. And so again, you're starting to get breadcrumbs here. I like to use that term, low, higher low. Here's a big move, smaller move. You're starting to create a secondary wedge pattern there. You now want to see it hit here, then bounce up here, pull back, and then eventually break out. Now listen, needless to say, this isn't an area where you want to go all in on. For me, I have positions in China, but they're relatively small in my portfolio. But for me, this is where I want to be slightly exposed. Some other big investors that are exposed heavily to China, David Tepper, one of my favorite hedge fund managers out there, and also Michael Burry has been loading up on China names as well. So just something to keep in mind. Okay, so one other thing here that we just want to go over briefly before we get into Bitcoin, folks, is that I did want to just take a second here to mention that we do have Lux Algo, right? So Lux Algo continues to be a great supporter here, guys, and I just love being able to talk about that signal that I have on the charts here that matches up here. And again, I'm just trying to find a good signal right here as we go through to scan the charts. But essentially what you can see right up here is that the scanner, you have the two scanners here, and they look for the bottoming and topping signals on the charts. And anytime it appears, it flashes. It works on all time frames, so you can use it on the 10-minute, the 60-minute chart, the daily, the weekly, the monthly. And again, Lux Algo has it beautifully where it just pops up immediately, tells you, hey, this is a buy signal or this is a short signal. And then the beauty of it is it gives you, when it hits first target, it has an automatic target calculation within it. Hits first target, hits second target, tells you right away. And then same thing with a stop out. When the pattern gets negated, it tells you right away as well, so the losses are minimal. And that's really what it's all about, right? If you have a signal even that's 70% success rate, but you know immediately when it fails, boom. It's a beautiful thing. So don't forget, folks, if you are interested, I think it's only, what do we say, $25 here. You can see it right up here on the website, Gareth Soloway's Lux Algo Reversal Signal. And if we click on that here, folks, yeah, $24.99. That's all it is. And it goes right into TradingView. It's pretty darn cool there. All right, on that note, let's just take a quick break here and just watch our Lux Algo commercial, as they are amazing supporters of us here at Verified Investing. Take it away.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, we are back. Let's get right into Bitcoin. Bitcoin had 4 up days in a row, but remember, still below the bearish bullish pivot line. So what does that tell us? You guys should know by now, if you've been following me, it means that the bias is still negative. We are seeing a little pullback today. Now, again, we'll have to watch and see, but really what you're favoring is a retest of 52.8, and if it breaks that, 49,000. Now, on the off chance, let's say that somehow the bulls can muster a push on this above the pivot line, and it can confirm. Now you're in line to see that bigger move up. But really, as long as it stays below 60 to 61,000, the bias remains negative until it confirms above that level. All right, so again, a little bit of a pullback there in Bitcoin. Gold today, after the CPI data, has come down just a little bit, but honestly, so little movement in gold, even from this CPI data. We continue to stay in a very, very tight little band right up here. Now, technically, is that bullish consolidation? The answer is yes. There are some small negatives out there that make me a little uncomfortable in the short term here, but nonetheless, it still is consolidating bullishly, but it does have resistance just above with the bigger channel line. Looking at silver today, let's take a look here. And silver, again, small gain on the day. We had the midpoint pivot, which was support. Silver has resistance right up here at around 29.65. And again, any sort of break of this lower trend line, this dotted line, you likely head back down to about 25.5. Any sort of breakout above 29.65 to 30, and you actually should trade all the way back to about $32.50. All right. Again, just thinking about position size real quick here. For me, I have really my long-term holdings in gold, but I took my profits on gold at 2,500 on the swing trade side. So again, remember there's swing trading and then there's long-term investments. And my long-term investments, I'm holding gold because I still think it's going to 3,000 and even beyond that. But my shorter term, we knew we had resistance at 2,500. Took that money and ran. On any sort of pullback, I'll buy. I do have a small, very small starter position on silver here. I like the downsloping channel, but I'm really partially hoping that we see a flush out here so that I can buy a much larger position on silver, as I still remain overall longer-term bullish on silver as well. Oil today, let's take a look. Oil catching a little bit of a bid here. Now, first of all, oil's oversold. Very sharp decline, $77 to basically $66. But one of the kickers here is you're getting a small bounce today, mainly because there's a hurricane in the Gulf. It's going to be hitting Louisiana, that area there, with a lot of refineries and drilling rigs. And basically, they're shutting down a lot of that production. So you're just getting a little mini pop. To be honest, very, very weak pop. What that tells me, any sort of bounces to key levels, short into it. Like if that's what we're getting, if that's the max, I mean, that's almost no bounce at all for this storm cutting off production right there. It ultimately, we're headed lower to probably 63 to 64. And that's really the level where I would maybe consider a swing trade, quick swing trade on the charts. Lastly, natural gas here real quick, guys, as we go through. I actually have one other chart I want to show you guys, and I'll talk about that. It's another commodity-related stock or ETF. But we do see natural gas pushing up right here. Look for this to continue up. If it continues up, I'm going to look to potentially short it right around 260, give or take. But again, the question is, can it confirm finally above this trend line and create that breakout that then pushes it up into that level? The one thing I wanted to show you guys today, ALB, which is a lithium miner, having a big move in pre-market here. Take a look at this. Got as high as 92 and change after closing yesterday, I believe around 78. It has pulled back here on the chart pre-market. But again, the positive here is the lithium chart of the ETF, right? So LIT is the lithium and battery ETF. This is one I have with my commodity members. Look at that move here pre-market. We actually just added to this position yesterday, so that's a nice positive to see. But essentially, the lithium demand is looking to be bigger and bigger and bigger, and that's got to drive this. And what I've shown you here on the daily chart, the LIT, which is my favorite ETF to trade off of this, if we look at this, I mean, look at this wedge pattern here. All right, so you have your first hit here, you have your second hit right here, third hit, fourth hit. Well, what do we know? I've taught you guys this before. All right, first hit, it's not going to break out. Second hit, nope. Third hit, nope. Fourth hit is 50-50. It peaked above the line right there and then pulled back. If it gets up to the fifth hit, the probability is about a 70% chance it breaks out. All right, so watch that. We'll basically be opening at or above that line. Can we get the breakout? If you do, this really has a lot of upside in the near term. So I'm going to be watching this LIT chart really closely today to see where it ultimately ends. Granted, I want to see confirmation to really firm up the breakout, but this is one of those charts that I love to see. Great tight wedge, and if you can get that kind of that tightening of the spring, where when it breaks out, it goes boom to the upside. So watch this one. I do like it here. Granted, if you're not in it, I'm not sure if I'd be buying it up this much, but on pullbacks, you'll definitely be looking as an opportunity. All right, on that note, I'm going to get to my trading room. Thank you so much for tuning in, guys. I'll talk to you tomorrow. Take care.